Good afternoon. You're watching AB Live or COVID Live as we call it right now. S&P Global had recently revealed their ratings on major real estate giants such as Emaar Properties, Emaar Malls, Damac Properties, Majid Futtaim Holdings, etc. And things aren't really looking that great for these real estate developers here in this region and in Dubai. Well, to tell us more about the real estate market and the outlook and the challenges faced by this sector, we have Sapna Jagtiani joining us remotely, of course. Thanks so much for joining us here, Sapna.
Thank you very much for having me.
Sapna, first things first, the last major recession that we'd seen that had really hit this market was back in 2008, 2009. I think a lot of people have been asking me this, and I'd like to ask you as the expert here today, is what we're seeing right now worse than what had happened back in 2008 for the real estate market?
I think it's very difficult to kind of compare the two scenarios. Obviously, the drivers were very, very different. Back then we were looking at, yes, a global recession that kind of impacted, and here we're looking at a pandemic, and therefore they have very different attributes.
Yeah.
I would like to say that from then to now, Dubai is a very different market. Regulation has improved significantly from 2008 levels, and while in terms of prices and rental, it's questionable if we've made any progress or any improvements since then, and maybe in terms of valuations as well. But the market is definitely significantly different from what it was in 2008. What's not changed is the investor sentiment angle, which obviously remains very key. It was key back then, and it is key right now.
But
where
in a good way or a bad way?
Well, international investments, of course, drive a lot of how the market kind of behaves and reacts. And as I said before, I think regulation is very, very key to keeping this in check. And so once you are invested in this market, you are kind of hooked for a while, and you can't run away, which is what we saw happened a lot in 2008. So
doesn't that scare the investors though? So when you're talking about rigid regulations and that you've just said that once you've invested, you can't really run away, is that going to prove to be a problem for the investors who choose flexibility?
Well, so far we haven't seen that because, kind of trading estimates suggest that, there is still interest in this market to some extent. And the product has changed significantly to address the kind of demand that we have. So, more affordable products, more relaxed payment terms and so on. These have helped make sure that investments are continuous, and it still looks like a promising market for some of these investors, and they've not all disappeared so far.
All right, so it's not all bad news then. That's great to hear. But then you had also revealed your recent ratings, which I just mentioned earlier. And then I do see a lot of rating changes. For example, if I'm not wrong, Damac was B+, and now they're B. There's Emaar with BBB minus, if I'm not wrong. What do these ratings mean, and why or how has it been affected after COVID-19?
Right. So maybe we kind of break up the real estate market in two different business models to sort of understand what are the pressures and therefore kind of dwell into them, because the two segments actually are quite different and therefore have different risks. So to start with, you have a developer, which is a home builder like Emaar Development or Damac Real Estate. These are guys who build an asset to sell to an investor, right? So the other model is real estate companies or the asset landlords that build an asset and hold it and therefore earn revenue off the rental income. So these are two different kind of companies. And for the developer segment, where we have home builders, you already have a current mismatch in terms of demand and supply in Dubai, and this is now worse or aggravated by COVID-19. So now we think that the residential prices will fall steeper what we previously expected, and the adverse trends of this will linger into 2021.
Do you know how much it's going to fall, though, in terms of percentages?
It's very hard for us to obviously give you specific percentages, and also, what we also look at is other real estate research companies that produce very good quarterly reports, like JLL and Expo. So what I would encourage the listeners is to read these reports, which are freely available on their website, to understand more in terms of the trends. But they are definitely negative, and this will likely remain negative in 2021. And it's mainly because of the negative employment trends, unemployment, unpaid leave, so on, that kind of weigh on the demand for new properties.
Right,
Even international demand for properties will be lower.
Yeah,
so
it has been a ripple effect for sure. But then even pre-pandemic, the real estate market hasn't been doing great. And I think S&P has been very brutal and very honest in that by stating that, it hasn't been doing great for the last 3 years or so. So we're talking about a phase before the pandemic. Why was that?
Well, as we said, this is mainly by the difference or the imbalance between demand and supply. So, this is a market which is driven by investor demand, a lot of it international, and therefore not necessarily dependent on the local population and the kind of rental demand as well. So we're looking at a number of properties now that are under rented. And so just going back to your previous question in terms of, why are we expecting negative trajectory for ratings for Emaar and Damac, which are developers. So we're looking at a BBB minus rating for Emaar group companies, Emaar Properties and Malls, and the rating is on credit watch negative. And for Damac, as we said, it's B negative. The idea here is that obviously we will see more pressure on margins. We have seen significant pressure, and we will see more pressure on margins on new sales. Companies will have to provide more discounts to even existing customers, and there might be higher delinquencies in terms of customer payments or even deferrals than we've seen historically.
Right.
So that's kind of indicative in the rating.
We've also seen a lot of delay in deliveries because although not all of the construction work has stopped, but there have been slowdowns in construction in progress, etc. So will these work stoppages result in a working capital funding gap essentially?
Yeah, I think that's one of the reasons, but just the work stoppages alone are not the reason. I mean, it was the very generous payment plans that were put in place, when the market was getting tougher and tougher. A lot of these developers extended payment plans, and that is kind of adding pressure on working capital for some of these companies.
Right, understood. Just want to remind our viewers right now that we are also taking questions from you. So if you do have any questions about the real estate market in Dubai, then please post them in the comments below, and I'll take it here with our expert Sapna Jagtiani from S&P Global. Sorry, you were saying, Sapna.
Maybe we can also kind of address very quickly the ratings for our real estate companies. We rate Majid Futtaim Holding. We rate DIFC investments, and Emaar Malls we've kind of already addressed with the Emaar group companies. But generally what we're also expecting for the landlords is more pressure in terms of rental rates and obviously difficulty in collecting rent and declining occupancies. And again, these are indicated in the rating trajectory. So we have the IFC investments on BBB minus and a negative outlook, and Majid Futtaim at the moment is on stable outlook. But this is an evolving story, so we will probably see more, rating actions on on some of these companies to come.
Right. To be honest, I'm a tenant, and one thing that has confused me in the past is about these prices that you just mentioned. On what basis are these prices fixed, and on what basis do the changes in the prices come about? Obviously, everyone's talking about rents going down in areas like downtown, Marina, etc. But then there's no fixed category, and you're saying that the regulations in the real estate market has become tighter, it's become more rigid, essentially. But then with regards to pricing, both rent and for buying and selling, I don't see a fixed sort of bracket or a structure in place. Is that correct, or am I just completely off track here?
Well, it is an open market, and so demand and supply kind of determine what you pay for, whether it's real estate or rentals. And so that really will drive, what your rent is and what is the price that you're paying. Yeah.
Right. So in terms of prices, you're saying that in Dubai, the prices have drastically dropped as of now.
Yeah, as I said before, they have been falling for the last 5 years. They will probably fall quite significantly this year and also in 2021.
Right.
At least on the residential front. On the rental front, again, depending on the asset quality, demand, supply, etc., you will see decline in rentals. Given the macro backdrop, it's obvious that there will be some downside.
Yeah.
As the travel restrictions ease, you will probably see a number of people leaving because they can't afford to live here anymore, and so on. And so it's pretty obvious that there will be some downside on the rental side as well.
So you're saying that even once the lockdown is lifted and the market starts getting mobilized again, we're probably going to see real estate not coming back up immediately.
Yeah, that's true. We've seen a few difficult months, let's put it that way. And from here onwards, I think what is in question is the recovery. And of course, the pace of recovery and the kind of recovery, including the real estate market. And that's something it's not absolutely clear at the moment. And this will, I think, evolve over the months to come.
For sure. I'm just going to take a few questions from our viewers now. We have a question from Joseph O'Reilly who says, do you have any information about projects which have stalled? For example, Culture Village, now known as Jeddah Waterfront.
No, I'm sorry. I can't talk about companies or projects that we do not rate. Yeah.
Sure. Sure, but with regards to Emaar and Damac and DIFC investments, Majid, Futtaim holdings, etc., do you see this as a trend where a lot of projects or the new projects that were supposed to be in the works right now have been stalled?
Yeah, you have heard from companies that some projects that were not awarded will be halted for now. Every company is obviously going to look at cash conservation. That is the key aim at the moment, to make sure you ride this next few months as best as possible without taking a hit, whether it's rating or equity, strength of the business and so on.
Sure.
And so the aim will be to optimize costs as much as possible, and stopping projects is one of those. Of course, when it comes to Emaar, let's say most of the projects are pre-sold. Yeah, so you have an investor behind every apartment, or most of the apartment, let's say. And so there is money in the escrow account, and therefore at some stage this will be built. At least that's the expectation. So sooner or later, I think there will be revival, once the companies are able to manage working capital.
Right. So all these projects that are being stalled right now, the new ones, is this just a response to COVID-19, or have all of these developers finally started reacting to the oversupply that there was in the market and the under-demand?
I think they kind of go hand in hand. Obviously, the current issue is COVID, and this impact is not only on development, but sectors all across. What, as I said before, what you can also expect is some delinquencies from customers or deferral of payments. And so all of that will impact the pace at which construction is done. It is a market that was oversupplied. I mean, the government itself came out with some measures last year trying to address this. Obviously, the higher real estate planning committee was put in place, but how really they can help in terms of the COVID situation as well, that adds more pressure, is a bit questionable at this point in time. But I think it's a combination of both of these things.
For sure. I mean, the reason why I ask you this is I know we've been talking about oversupply for at least the last 3 years. In spite of that, we saw that last year in 2019, there were about 35,000 residential properties that were delivered. And this was the highest number delivered in a single year in Dubai, correct? So, I mean, I don't see the market responding to the oversupply then if this is what is happening and this is the rate at which the demand or the supply is increasing.
Well, look, as we've discussed before, it's a pre-sold market, right? So you have usually apartments and units that have an investor on the back of this, and he's paying, and the money is in the escrow, and so you have to build this. And what this has done is built up a pipeline of units that will come to market. You've seen a very high number in terms of supply in 2019, and in 20 also was supposed to be a record year, but I suppose now we're not going to see the same level of supply that we initially expected. As we've discussed, some construction has stopped and so on, and so you will probably see some adjustments in terms of delivery timelines. But since a number of units have been pre-sold and therefore they will be built and delivered for the next 12 months, let's say 24 to 30 months, it's difficult to control supply, and any meaningful halt to supply will probably come after 2022. I think that's a reasonable assumption.
After 2022 only, but amongst the properties that you rate or the developers that you rate, including Emaar, Damac, DIFC, etc., who do you think has been responding to this well? I think I did have a conversation with Emaar Jagtiani 2 months back, and she said that Damac has already stopped giving out new projects and they're working on the older projects. Do you also see the others doing that in terms of limiting supply?
That's true. I think across the market, you've seen new launches had come down quite significantly in 2019. And so, this point is being addressed not just by individual developers, but as market as a whole, where they're trying to scale back in terms of new projects and make sure that everything from the inventory is sold. They're not holding on to any assets. And that they collect on time as well. So there have been a lot of, let's say, initiatives from developers over the last year or so, because this problem has been existing and has been flagged for a couple of years already.
Right. What I really want to ask you right now is about DIFC investments. I think they've been an interesting case in the last couple of years, I'd say. I was tracking their progress, and I've just come to realize in terms of numbers that they've been doing relatively better than the other developers in the market. First, would you agree? Second, if you do, how have they managed to achieve that?
So DIFC Investments is actually not a developer, it's a real estate company. So it earns its rent from rental income, right? So in terms of their performance, yes, they have been doing extremely well. One of the reasons for that is, of course, the asset quality. They have kind of the best office space that's available in the market at the moment. And they charge, pretty high rents versus the rest of the market as well. So they have been outperforming the market. Usually the office market has vacancies of about 15, maybe 20%, and the IFC was trending at a good, let's say 90+% occupancy, even more, I would imagine. So in that sense, that helps. DIFC, but you've seen that even the IFC and the kind of tenants that they have, even they've had to announce these stimulus packages for the market for their tenants, and they've announced deferral of rents and reduction on fees. So what I think I'm trying to get at is with COVID, I mean, no matter how good the company is, there will definitely be pressures that prevail over the entire market, and so you're going to see tenants and landlords actually, whether they like it or not, they have to help out their tenant base and customer base.
Right, but can you tell me more about these relief packages that you mentioned? So DIFCI is doing it. Are Emaar, Damac, Majid, Futtaim, are they doing it as well?
So yes, Majid Futtaim announced a rent relief program for its tenants, where it said, it would not charge rent for the time the mall was closed. So that's about a month.
Okay.
And we think other companies will also have to play a part in this recovery. You've seen some government-related real estate companies have announced this relief package as well. And yesterday we saw Dubai Healthcare City announcing rent waivers and reduced fees. So such plans help retailers and companies in the office space that are facing like revenue losses and providing them some kind of respite when it comes to operational expenses.
Right. Again, just reminding our viewers that we are taking questions from you. So post in any questions you might have in the comments below, and I will take it up here with Sapna Jagtiani from S&P Global. Sapna, I did get a question from Natasha, who said that during a downturn is supposed to be a very good time to invest in property. Will that apply, or will that rule apply even now today?
Unfortunately, the role that I have at S&P as an analyst, I cannot provide views on questions of this sort.
Right, okay. I'll let Natasha know, and if she's watching, she's got her answer, but perhaps we can take it up from one of the developers who are giving out properties and encouraging investors to invest. But then what have you seen in terms of foreign investors? I think all of these developers and the major developers in Dubai were relying on investors from the UK, etc., to invest in property and buy property here. Has that changed? Have investor sentiments changed?
I think along with the UK and a lot of regional interest in Dubai, so let's say Saudi and other neighbors that we have, there was also a lot of interest from China and other Southeast Asian countries. And just in the context of COVID, obviously the restriction in terms of movement means that you're not able to conclude any of these sales. So definitely that will have an impact. And from here onwards, what will impact the sales volume from international investors is how those respective economies are faring and their view of the Dubai economy. So definitely there will be some impact.
And I think it's also important to address the role of banks at this time. Banks have received a whole relief package and an economic stimulus from the central bank and the government, etc. And it's about how they are going to allocate these resources. And of course, they are doing a lot to help the bigger businesses, etc. In terms of the ability of government of Dubai to provide financial support to its government-related entities, it looks like it's going to be weakened for the next 2 years, is what I read in the S&P report. So are you saying that now banks are not going to be able to support all of these real estate developers then?
That's not entirely true. There is a lot of support that was announced by banks, also by governments. There are a number of initiatives that the governments have already rolled out, and maybe I can list a few of them.
Sure.
One of them is to raise the maximum exposure banks can take to the real estate sector. So that's gone up from 20% to 30%, provided the bank has adequate provisioning. Then a 5% increase in LTV ratios in mortgage for first-time home buyers.
Okay.
The third one is increasing the maximum off-plan LTV from 50% to 55%.
Mm-hmm.
And lastly, of course, you might have seen this, a 10% reduction on power and utility bills on your DIVA bill for 3 months. So that's residential, commercial, and industrial. So all of these measures aim to help ease the liquidity pressure and maintain investment in the sector. And it's too soon to say and to see the benefits, but we'd have to assess the impact of these over the next few months. And of course, the other, I think, supportive aspect is that the government allowed construction activity, was considered essential and was allowed even during the lockdown.
Mm-hmm.
And it continues with strict health and safety measures in place. And so that's a very, very supportive factor for the sector.
Right, I'd also heard that there is going to be the 4% registration fee that is being charged at the moment that's going to be waived off. Is that a blanket waive off, or does that happen on a case-to-case basis?
I think what is currently happening is that the developers are absorbing the fee, and that in a way works out as a discount for the investor.
Right. And how about the older schemes that were brought about, again, about a decade back when the problem started in terms of rent to own, better financing? You mentioned the LTVs being increased, so that is good. But again, are we going to see a lot of rent to own schemes and short-term leases as well?
You will see a lot of new initiatives in the real estate space. I mean, it's obvious that, pressures like this will bring a lot of change to the structure of the economy. We're looking at something very unprecedented here. And so we must think about demand for office space, demand for retail space, etc. will definitely change, where we focus more on working from home or on shopping online rather than going to the mall. So there will be dynamic structural changes to the business. And which will lead to a lot of new innovations in the real estate space. So the schemes that you mentioned, and maybe even beyond those, you will see, new means that will come to the market.
Oh, great. That's actually really, really nice to know. We are looking forward to the new schemes. One more thing I really want to touch upon is employment with the developers that you handle and the ones that you rate. That's Emaar, Damac, etc. Are there a lot of austerity measures being taken place there? Is that going to be revived once the lockdown is lifted, etc.?
Well, every company, as I said, the focus is to conserve cash flow, and they will conserve cash flow the best way possible. And the idea, of course, is to kind of ride this difficult period. And every company, and we've seen announcements, have different measures in place. You've heard of asset sales, potential asset sales. You will see job cuts, salary cuts, other cost savings, less facility management, less air conditioning expenses, less utilities, and so on. So, there are a host of measures which companies are looking at individually that's possible in their ecosystems to save as much cash as they can.
Right, great. And finally, I think this is one question that a lot of our viewers have as well, and this is one thing I want to ask you too. I think all of the real estate, the entire real estate market was heavily relying on Expo for its operation and increase in sales. Now that Expo has been postponed, do you see that as an opportunity, or do you see that as a huge loss?
Look, I know that on the one side, as you rightly said, there were a number of hotels, leisure businesses, and other real estate that was looking up to the Expo and therefore looking for it to provide a boost to revenue and growth. And obviously, these businesses have seen a tough few months, and they will continue to see the pain for another few months, likely. But then on the other hand, the postponement provides developers and organizers more time to complete the sites and projects, because the restriction of movements that we saw over the last few months, it made it hard for companies to function for normal. Yeah. Now, it's very hard to imagine how many people would have actually attended the event if it was this year, seeing that, we aren't going to see global travel restrictions ease down anytime soon. So this could be a blessing in a way,
Yeah.
and it will help recovery of the economy in 2021. So all the benefits of the Expo we've been talking about, millions of visitors coming to Dubai, increased business activity, economic activity, this will now likely flow in 2021, subject to travel restrictions and how many people will actually attend the event.
Which is why I asked if you see this as an opportunity, because again, the Expo, we were expecting 25 million visitors, but Dubai, was it prepared from an infrastructure point of view to accommodate so many visitors and cater to their infrastructure, real estate, malls, hospitality needs?
I mean, you have to remember this is a 6-month-long event. So no matter what the number of visitors are, they're not all going to come to Dubai at one point in time.
Sure.
And so the numbers may look huge, but you have to think about it from the timeline perspective as well. And sure enough, I mean, the oversupply in the economy suggests that we have indeed geared up to a much larger capacity than we need for our day-to-day, right? So I think that kind of suggests that we have the infrastructure, or we are still building the infrastructure for an event of that sort.
But just another thing though, many investors had actually bet that Expo 2020 Dubai would inspire maybe another real estate boom, and they were relying on that heavily. Now that it's Expo 2021 and it's officially been announced right now, do you expect the same boom to happen, or would that also be affected?
Look, from our perspective, and we've been quite consistent on this from the last few years, we actually think the oversupply situation is only creating pressures and issues when it comes to residential prices and even rent. And now this has kind of been worsened by COVID. And so it's very difficult to kind of predict prices at this point in time. As I said, our expectation for Dubai for 2020 is a very weak year in terms of prices and rent.
Yeah.
And will continue to remain weak in 2021. So boom for us is not in our base case at this point in time.
Right, I would hate to end on that not so positive note, but unfortunately we're running short on time. But thanks so much, Sapna, for joining us, and thank you for giving us all of those valuable insights. You did mention a few silver linings that we need to look forward to, and we are going to do just that.
Thank you very much.
And thank you to all the viewers for tuning in, watching and sending us your questions on the Facebook Live broadcast and otherwise. We will be back again with another session next Tuesday. And Ramadan Kareem to all of you.